This is Shorthammer. It is the 8th of May, 2022, and this is Trading Zones. Last week was volatile and nuts, and I loved it. So let's see where we are right now. So we're down around the 1836 area on the RTY. And if we look back to the previous 4-hour candle, what we'll see is a bounce was attempted, right? We did attempt to get back above this 1957 area. We just failed to do it, right? And if we look at what the Fed said, and just one of the reasons people got excited about the Fed news and then got excited about the job numbers, right? The Fed news was that we're not raising interest rates as high as we could raise them. We're raising them at the lower end. So people were saying, hey, if they raise them, I'll give you, for example, if they raise them 0.5, that's fine. If they raise them 0.5, but if they raise them 0.1, 1.0, that's just too much, right? And so it's just like a lot of times you have to look at things in a way where the market is trying to put things in a way where they can predict what's going to happen. And then stimulate movement based on the predictions, right? And so if you look at what happened, I think they came out at people said they could have come out at 0.75, but instead they came out at 0.50, I think it was. I'm not sure exactly of the number at the moment because I don't have it in front of me, but you get the point. And because they didn't come out of the potential higher number, right, which is not what they're going to do anyway, then the market was rallying based on that. It's hogwash, right? Because the bottom line is this, guys. Inflation was an issue before the Ukraine-Russia war broke out, right? So before that even broke out, inflation was an issue, and the Fed was saying that they were going to have to raise rates to try to deal with that issue, right? So after they came up with this plan to be able to raise rates, to cut back on the balance sheet, to do all these things, to be able to battle inflation, what happened? Ukraine, Russia happened, right? And that took inflation to a whole new stratosphere where it's hard to be able to, to be able to properly manage something where there's an uncontrollable variable. And right now, the fallout from the Russia-Ukraine war is an uncontrollable variable. So whatever numbers come out, whatever people are saying, nobody knows, right? Because no one that's alive right now has ever tried to manage an economy, a global economy like what we have now, where so many things are interconnected, where so many whether it's fulfillment or it's just all this supply lines, all these things, supply chains, I should say, all these things are interwoven globally. And no one alive has ever tried to navigate an actual war, right? Or whether it's by proxy or, the countries are actually fighting each other, whether it's, NATO, all these countries that are involved in the sanctions, and people are picking sides, countries are picking sides. And it's such a big issue. No one that is managing any part of the Fed right now has ever dealt with something like this, and they're trying to control it. So that's what you have to expect, the unexpected, because they have no clue how to manage this. No one alive has ever been through something like this before. Never done. And if someone tells you that they have, they're lying, because the last time that we had a war that had global implications, the world was not so interconnected. And that's what makes it different, right? Supply chains, how all these different countries depend on each other, monetary policy, dependence on oil and energy from different countries that may not be friendly to some of the political views in our country, right? And some of our relationships and our allies. So it's a big gumbo of, I think, confusion that they're trying to unwind, and trying to say that if we raise interest rates and do X with the balance sheet, we can control this. No, tail wagging the dog, they can't. So we'll see how this works out. This is not a doom and gloom statement in any capacity. I'm just saying, be careful how heavy you go in with the expectation of um, the way things have always been is the way it's going to be. Things are changed, right? And we'll see after this conflict is over and after things settle back down again, we'll see where we are if things go back to normal. But we're operating from a different playbook right now, and we need to trade like it. If you can, please size down and be careful. So let's get into this. I'm not gonna keep going on that. So right now we're at we bounced off the 1815 line, right? See, we have a line here, and you can look at the last video. Line has been there, and we're back around 1836. So what should we look out for? So for me, what I like to do in a situation like this, I want to see what did we do the last time we were at this level on RTY. That's what I want to see. So let's go ahead, and this is on the daily chart, right? So let's see if we could zoom a bit on the daily, if this will give us what we want. When is the last time we were at 1815? What is going on here with this? This feels a little funky. Why is my chart moving in such a janky way? Okay. Bada boom, bada bing. Maybe the internet's kind of laggy at the moment. Sure, there's a lot of gaming going on in this house somewhere. And a lot of streaming too. Oh gosh, the kids are probably gaming like crazy and also streaming like crazy, right? Okay. So when this stops, you can stop at any moment now. That's good. Okay, so we see that the last time, why is this so janky right now? Come on. Where are we going? Okay, stop. That's enough. That's cute. Now we stop. Let's get her done. Enough of that. Enough of that. And happy Mother's Day to all the mothers. Started the day off strong and trying to finish that bad boy up strong. My baby happy. So we're down here around the 1815 level, right? And the last time we were down here was back in November of 2020, right? And so what we want to look for is what we had when we touched this level. We had a breakout that we back tested the 1815 level, and then the buyers broke us out. It was a breakout level, right? So what we want to see is we don't like that we closed down here, but that's okay. We want to see if we can get back above this 1863-ish line, and if the buyers step in and can sort of restart this run. We'll see, right? Because this is kind of funky right now, and you don't want to trust anything, but we want to see what happens. The last time we were here was a back test, and then we broke out. So we haven't been down this low since November of 2020, right? That's what I see here. Yes, roughly, no, December. November, so November, December of 2020. So we want to see if we could buy out of this level, right? And so if we drop below this level, and that's a good question, what do we have? Let's see if we can see some of that. Okay. So if we get below these 1815s, then we're getting down here around the 46 or 1746s, 1721s, and 1702s. And we see another level that we had a breakout, and right here around the is this 1670s? What do we have here? Let me see. Let me get this level right. 1690s. So we'll see how this shakes out. But if we don't sort of get back above the 1860s, and we continue to sell through the 1815s, the next level that we should watch out for is potentially down here around the 1760s, 1740s, and 1721s. Those are some areas to keep an eye on when it comes to the RTY. Is it possible that we can sell down there? Yeah, we've been on an epic run, guys. And I think that you have to, in some ways, appreciate the run that we've been on. And this is no longer a pullback. This is definitely some serious selling. And what I would do is just look for strong levels. Once we reverse and we begin to buy back up, don't try to be the first in, but look for the market and the volume as far as how many people are buying, how much money is being put into the market. Look for that to change. And that will be some of the signs that maybe the money is back in the market, right? If you're a retail trader, we can't make this market move really, not at all. It has to be the big money that's coming from these institutional investors. That's what makes the market move, right? And some of them are a little bit skittish right now. So just be careful with your dollars. Don't be prideful. And why is this showing here? This is all the alerts. That's nuts. And we'll close that out. And I'll close that. This is weird, man. Whatever's going on today, this is kind of dragging a bit. I don't like it dragging. Okay, but it's fine. So that's the RTY. That's what we're watching for. And remember, watching the RTY, you want to keep an eye on financials and keep an eye on small caps. Those are the things that you'll see moving. So if you see the RTY going the other way and it starts to get bullish, take a peek over at your Goldman Sachs, take a peek over at your Wells Fargo, at your Bank of America, and credit unions, depending on what you invest in. Just take a look at those and see if you can sort of follow on with one of those tickers if you're not comfortable in trading the futures. So moving on to the next one. Okay, over to the MES. This should be gone. I don't know why that keeps popping back up. It's weird. Okay, let's go ahead and shrink this together. So the same thing, right? We had these areas. So the top of this candle was, let's see, 4303, right? And so we had the inability to get bullish above that. So what you might want to mark on your charts, and this is just what I would do if I were you, is this 4300, 4303, 4305, all through that area, and see what happens the next time that we get there, right? Is that still a selling area? Are the sellers still there the next time that we get there? That's something to watch for, right? Are we bullish above that? Are we buying above that? Is the volume increasing when we get there? Is the selling decreasing when we get there? So that's something to watch for on the MES, level to watch for. What happens the next time we get back into those 4300s? It's going to be interesting. But right now we're down around 4119s. And what you want to see is this is the lowest close that we've had in quite some time. And so what you want to see, this is a daily chart that we're looking at. I'm usually looking at the 4 hour. I like the 4 hour better. I'm able to pull different patterns out of the 4 hour that I like a lot. But one of the things that I do want to see right now is, when's the last time we were here? And it may be the same thing. Let's see. The last time we were at this level was in 21. So May of 21, we're at this level. And we kind of struggled around a bit. So the lower level that we tested was, we definitely went through, what's this? The 4075, went through there. We went as low as 4028, okay? And that was on 13th of May. Okay, cool. So that's how low we went. We went as low, let me check the candles, 4029. Okay, so that's interesting. We want to see. So we know how low we can go, right? So what we want to see is, if you're bullish, you want buyers to get us back above the 4145 area, 4150s. Watch that area. We want to get back above that. 4150s, want to get above that. You want the volume to increase, right? And then you want to watch what happens when we get to the 4300s to see if the buyers can get through that level. just because the last few times we've tested that level, we tested that level on the, this is off the sell candle, right? So on the 25th, the 26th, the 28th, and look at this, the 4th, the 5th. So that's multiple 1, 2, 3, 4, 5 times that we were around that level, that we just couldn't find buyers above that. So that's telling you that that's where the sellers are, right? And there's probably a few more areas where there are sellers, but that's just telling you that when we get to that level, keep your eye out and be aware. Let's head over to the M&Q, where I like to be anyway. This is my comfort zone. Love the Qs, right? Boom. Same thing. I want to be zoomed out so we can see the last time we're down there. And that was in 21, right? Roughly around March. So what do we want to see? So if we're looking, wait for this to slide over a little bit, at the structure that we had there, went up, we came back down, boom, boom, back down, kind of broke out. Man, this looks bad. We got to get back over the 13079s. That's quite a way. So if I'm looking at this, me personally, this higher time frame isn't going to mean that much to me right now, because I'm going to be intraday stomping on this bad fella, just based on the time frame that I like, right? That's what I like to use right now, is that intraday. So if we're looking at the intraday, this thing is falling off a cliff. Let's see if we get a buyback up here. We want to see if we can get through this little shelf, which is up to about 12,920s. So that's what we want to see, a buy through the 12,920s, and we're bullish. And could we get a squeeze through the 1319s and maybe a back test in the 13100s? We'll see if that happens, right? But what I'm going to look for is what's the trend when we open, open at 6. What's the trend? And what's the market say? I doubt I'm going to be trading the overnight session at all. I'll probably wait for the open tomorrow and trade the intraday. Just because for me, I like to be able to look at other tickers to be able to figure out which direction the market's going and try to get some clues on that. And sometimes I'm wrong, sometimes I'm right, but usually more right than wrong. But definitely watching this level, seeing what the next candle is, and seeing if we can get back up here. We have to see, right? The market's in an incredible fragile place right now, and it does need good news and stability. And some of the things that the Fed is talking about as far as the balance sheet and the things that they're mentioning, it's not that it was bad news, but it's just too much going on right now. And I think people are starting to realize that the Fed has no control. Like, they're not the ones that are determining the direction of the market right now. And they have to be careful, because depending how much capital they infuse into the system, it could increase inflation, right? And trying to balance that with what's going on globally, and inflation globally is a huge problem, and people are saying that, the housing market is still great, still holding on. For some of us, yeah, right. But for some, it's a challenge, especially as these interest rates begin to go up and we begin to squeeze. It's a challenge, and we all pray that the housing market stays very strong and vibrant and continues to drive the economy. But at some point, we've been on a decades long run, right? Maybe maybe a little bit longer, but it's been about a decade of the run that we've been on. And usually that cycle, I believe, is supposed to be 6 years. Correct me if I'm wrong. But usually, you have the automatic, I would say, either you call it a correction or whatever, where the market pushes up for a certain amount of years, then there's a pullback, and it's healthy, right? Just like if you're trading a breakout, a lot of times the safest thing to do is to wait for a healthy pullback to a area that used to be supply, that you're now looking for demand. Has supply become demand, right? Has that area now become an area where the buyers are? And so I think that that's that's what we want to see. That's what we have not seen in the housing market, and we have to see if that continues. But just interesting setup here. We'll see how this plays out. I mentioned the levels that we're watching. This line here, let me open this up because I want you to see these lines and these numbers clearly. I don't want it to be jumbled at all. So we'll open this up. And then what I'll do is I'll drag this up so you can see the levels where we are right now. Drag this up here. Okay. So on what day was this? On the 4th, I should say, on the 4th of May. What I wanted to see on this buy up was us break the 13,560 area, right? We haven't been able to get bullish above this, right? Does that look familiar? Like a lot of the other charts that we've been looking at, there's a level that when we get there, the sellers are saying no, right? And that's a problem, especially if you're a buyer. So we need to get through those 13,560s, and through that area, then we need just the volume to increase, then we could pop. But until we get there, these charts are nasty. And so we're looking for more downside potential, right? We want to see what happens there. So even if we buy up and you're long, you're cautious, you're trading point to point, right? So you're trading from current point of demand to the next supply area. And if you're in one contract, you're getting the heck out. If you're in multiple contracts, my recommendation is shave off a percentage of those, preferably a percentage strong enough that the market rolls over on you, that you don't feel the burn. Whether it's 75%, 70%, 60%, everyone's different. Some people do 90%, but secure enough of that bag that you feel comfortable that if the market gets crazy on you, that you're not going to put all your money back, like give all the money back to the market. The only money that counts is the money that you cash out. It's like you're in Vegas or you're at like a card table or something, or you're playing Russian roulette or whatever. Not Russian roulette, but you're playing roulette, right? Let's say you're playing roulette, spinning that bad wheel, right? So it's all good. You're up $5 million, which I know is not happening. Let's say you're up $5 million and you're sitting there calling everybody, saying you're a millionaire, you're going to buy them a house and all that, but you're still spinning until you cash out and you leave with that money. That money is not yours. So when you're in the market, right, until you close the position, the money is not yours. You have to close the position and wire that money or pull that money from the trading account and put that BAFLA in your pocket or into your bank account, then it's yours. Until then, it's like having equity in your walls and the market crashes and you're like, hey, I want the equity out of my walls. It's gone, dude. House won't appraise the same, right? So you get it while it's there, if you can. So we'll see how this plays out. This doesn't look great, if you're just looking at this, it's not a good looking pattern. It's like we have a triple top almost, and we have a lower low here. Like we're just selling. You can say this is one big giant M pattern, right? I know it's probably not how people are looking at it, but I can say that boom, here to here to here, right? The 20th of April to here, the 2nd of May through the, what's this? 2nd of May through the 5th of May, right? And then we got to get through this area here from the 2nd of May early, right here, this area here. And let's see what this says. This is the 4th. Okay. So we broke through, and if we sell from here, is there a possibility that we can go 12,700, 1356, 600, 700, 800 points? We have to see, right? But don't listen to me. I see patterns and things in a loopy, janky way, and I play them in a weird way. But that's my flow, my style, the way that I do it. But just be careful with the cues. And if cash is a position, if you're able to sit out when you're not quite sure what's going on, and you're not able to manage your emotions, if you can sit out. That's sometimes the best decision you can make, is to not trade. So just be cognizant of that. Cash is a position, and don't be afraid to hold that position. Just my opinion. So if we're looking at Amazon, Amazon is at an interesting level. We're down here around the, what's this say? Is this 2290s. So what do? We go to the charts. Open this bad fella up. Check out the daily. We're going to zoom out and we want to take a look. What were we doing the last time we were in the 2290s on Amazon? When was it? What were the patterns? What did the chart do? Right? What do we believe? Like Olaf says, water has memory. We believe the chart has memory, right? That's what we believe. So let's see. So the last time we were down here, it looks like we had a little bit of dancing. And so this is around the 4th of May, 2020. So look at this break. Look at these back tests we held and we went right at this here for the back test. And we took off to the upside. That's the last time we were here. And we got to look back and see, look at these gaps. So this is all interesting, right? I'm looking back here on this date on the 28th of April. That's interesting, right? So I can't wait till Elisa starts doing the pivot stuff so you guys can see these levels. So beautiful. So let's pull this up a little bit. Are you going to go? Okay, let's see what the next level is on this. It's another gap. Yikes. Okay, gappy everywhere. Okay, so below this 2290s, right? The next level we watch is the 2185 area is the next level. Then below that, 2186, 2160, 2156, 2134, 2092 are the lower areas that we're going to be watching. If we manage to sell through the, what's this line, 2225, 2251, it looks like. If we manage to sell through the 2251, that will be interesting. We have these two little circles here, which indicate a level that we were watching closely, and it held that second tap. So if we do sell to that, that's going to be something interesting to watch, right? We're at 2295 now. If we sell to 2250s, if we get through that, we breach that level. We definitely want to see if the lower levels open up here. But you're seeing my chart and seeing what numbers I have for Amazon. Be careful. I'm sure they're going to, as usual, guide, have some crazy, EPS numbers, but that's Amazon. We'll see. With inflation, all this is hitting every company, guys. Everything is costing more, right? And at some point, there's just so much consumers are going to bear where they'll say no. And you also have the rise in interest rates, which means it costs more to just do business. And also with supply chains interrupted. So it's interesting. Amazon is definitely something that you want to keep an eye on. Definitely very interesting. Head over to Microsoft. Microsoft 274.70s. Definitely at a level here. So the last times we touched in this area, roughly, what's this? Let me see. These 272s. We bought back above. You don't see multiple candles selling below these 272 areas and volume increasing and really tanking us, right? So that's something interesting to watch. If you're interested in something like a, let's see, what's this say? Come on. Interesting. So if you're interested in Microsoft, what you want to see is check their guidance, see what they said last earnings, and check their earnings before that, check their guidance, and check what they do each quarter, because some companies they perform seasonally, and sometimes it's not just the season, it could just be their sales cycle, where certain cycles they're generating and making more cash than other cycles just based on that's just their sales cycle. That is something to look into on Microsoft. That's usually a very strong performer in all different areas. They usually do very well in all their departments. So it's definitely something to watch here to see where Microsoft is, what they reported on their earnings, and what was their guidance. Because remember, one of the main things that bothered us was it's going to be hard for companies to guide up when the Fed is raising interest rates to try to stave off inflation, right? People are going to be spending less money. Debt is going to cost you more money. So it's interesting to see how these dynamics play out and how honest companies are going to be about their, sort of what their forward-looking numbers are. So we'll see. But definitely watch this level. The next level above this is 276, then 278, then 283. We'll see if those we buy up to those levels. The lower levels are 271.75, 267.85. So that's going to be interesting. Those are some levels to watch on Microsoft. Let's keep it moving. Okay. Here are the kiddos. They're playing some battle game. Not sure what it is, but you can tell they're having fun. Man, I apologize, guys. I keep forgetting to take the time to move the lines over for Netflix. But let's look back and see what we've got. When's the last time Netflix was here and what did we do? What movies were we watching? Were some of my children even born? And to anyone that's in Netflix, nothing personal. Just having fun. That's the thing with trading, man. You can't take it too serious. Yes, it's finances. Yes, finances are serious. Money is serious. Legacy is serious, right? But at the same time, you have to be careful not to let this market turn into a monster and chew you up and spit you out. And one of the best ways to do that is to control your emotions, in my opinion. Are we dragging right now? Okay, dragging a little bit. Okay, let's get this back a little bit the other way. So I don't know. Well, it's probably because I have so many lines and it's loading so much. Let me clean up my charts. I will have to. I'm telling you, some of these lines are like my children, man. I love them all the same. It's hard to choose which ones to get rid of. Maybe I'll get rid of some of the ones on Dollar Tree. Things like that. iRobots, lots of stuff I could get rid of. I could get rid of some. That's true. Okay. Thank you. Can we get a little movement here? Okay. The last time we were here was 2017. Yikes. It's a long time ago. And yeah, this is bad. Really? Yeah, this is bad. Be careful with Netflix. I'm sure they're going to buy back up. If you remember, and I'm going to repeat it here just to save anyone the time. Netflix's biggest issue is that they don't have enough nostalgic content. And I think that going forward for streaming services is going to be huge. New is great, right? But For a lot of people, as you get older, you want to see content that takes you back to a time in your life when things may have felt a little bit simpler, right? Maybe a little bit less responsibilities, or maybe it's just a memory that you share with a loved one, right? So you want to watch those movies or watch those cartoons or those shows, those series, that content from then. I just don't think Netflix has enough of that. I think there are a lot of other platforms that also offer streaming services that, they own some of this content, and they're putting it out now, and it's absolutely amazing, right? When it comes to the new stuff, yeah, Netflix is amazing with original content. When it comes to nostalgic content, not so much. That's just my opinion. They do have some things, but a lot of the nostalgic stuff is in other places, and that's one of the things that I think that they'll have to work on. So let me keep it moving. Um, and also it's the economic cycle, which like how companies have economic cycles, countries have economic cycles, people have economic cycles. And so for a newer company, right, that doesn't have all the overhead of a Netflix, for them it's easier for them to not worry about where you're logging in and how they're handling that, because Netflix has been really bad historically about handling logins and people sharing accounts. They've put themselves in a position where it's like an expectation thing, right? When you allow someone, right, this is just figurative, someone to treat you a certain way and you continue to accept that, if you change, they're going to have a problem with you, even if they were the ones that were treating you improperly, right? So Netflix has allowed, its consumer base to treat it a certain way. And Netflix is trying to alter that by blocking access, where it's saying, hey, if you have an account with us, we don't want you sharing it with 10 people. How are you going to enforce that? It's going to be a challenge, because the way the relationship has worked historically, you have not really made a big stink about it. You have not had a problem with that. So now you're just going to cut people off with all these streaming services, all this competition, all this nostalgic content. The time to do that was when the competition wasn't so stiff. It was before Disney Plus, before Paramount had a streaming service, before HBO had a streaming service, right? Before there was a Hulu and all these other streaming services, before they were, in direct competition with Netflix. That's when you tighten the screws. You don't wait until everyone is, so the market is flooded with similar products to then start tightening the screws on your loyal consumers. It's tough, right? They're in a tough spot. Don't know how they're going to get out of it, but it's a tough spot. So looking at Netflix, for those that believe in the long-term vision of Netflix and feel that I love their original content. Personally, I have Netflix, and I just love the original content, especially when they do that with stars that you recognize. I think it's a really smart thing. But I just want to see how they come out of this, right? I think they're doing a lot of good things with content, but not enough with nostalgic content. So if we're looking at this, we said this is back from 2017. Let's see if some buyers step in and really begin to put a floor below Netflix. Until that happens, I'll be more or less watching it, to see what it does. But this is just interesting. We want to see the buyer step in, and we can see just the way it was moving back then. It was in I'll say a bit of a channel between the 200 level and like almost this area, the 180s, right? Like we're in a bit of a channel for a bit up, just stuck between that and right here, just what's this, the 189, almost like 11.189 to 200. That was also a channel that it was stuck in for a while. So let's watch the 189 to 200 area, and then the lower area, this 170. Let's see, 182, 180-ish, 176-ish. Watch that area also to see sort of how the buying and selling occurs in that little box. And if we happen to drift lower, we'll see. But, Netflix is interesting. Let's get back over here. Wait for this to stop moving. Oh, come on. Let's undo that for sure. There we go. I'm telling you. We shall see what happens in these 180s. If we dip below that, it could get interesting, right? In 2017, my gosh. Like the first time I think I bought Netflix, it was at like 91 bucks. Let me switch this up once this stops because I want to get some bigger candles here to be able to see. Let's look at the 6 months, see what that looks like. It's gonna look nuts, but it gives us a little bit better indication. Looking at the 6 month, let me look at the 1 month. My fault. I'm taking so long at going through these guys. I just want to make sure it's clear when what we're seeing, what we're looking at. Okay. $165 is interesting. Steep decline. Okay, so we just have to see. But the 165 is interesting. The 140s are interesting. Those are some levels to watch here on Netflix. Okay, let's get out of the monthly. Go back to the 4-hour chart. It's gonna look all janky crazy. Thank you. Not too bad. And let's slide on over to Facebook, or as it's called by its friends and close associates, Meta. One of the things that we did mention about Facebook is that we really like how they pivoted, right? Not saying they still don't have an ad business, they do, of course, but that pivot into the metaverse is brilliant because it's almost like you're a business that operates on Earth, right? And you purchase all the mineral rights to Mars, and then we all go to Mars, and then we have to rebuild all the things that we had on Earth on Mars, and you control that, right? So if Facebook can control the metaverse in a way where they are the main company operating in the metaverse and they could sell advertising. Imagine this, right? This is what's so cool. And okay, this is what's so cool. Imagine that you can go through a concert inside of the metaverse. Let's say you're going to a Madonna concert, right? So you show up to the Madonna concert and you go to your seat to sit down. So let's say they have seats and you're sitting down in your seats and you kind of have an image of the person that's to your left and kind of have an image of the person that's to your right, right? But what if a company wanted to purchase ad space on the stage? So when you look at the stage, that's superimposed over a portion of the stage to say Pepsi, and they're paying for that, right? They're paying for that. And let's say that in some way that ad is being served up by Facebook. Let's say that you're going on vacation, right? For example, I think this is really interesting. Let's say you were to pay someone who lives in a country to do your vacation for you, and they are just going through their island or wherever they live, and you're looking at it like how Google Glass was. You're looking at it through their own eyes as they're doing things, right? And that there's advertising in places that you look, right? Superimposed over the image, sort of like how you see in Transformers, how they have, Ford and all these different ads all over that. So I think when I think of the metaverse, the way that I view it, I think that Facebook has created a new world, a blank canvas where they may be able to, and we'll see, they may be able to really, really, really do a lot with superimposing advertising on different backgrounds and different portions of it, right? You're having a board meeting, and let's say you want to be able to get 50 interchangeable backgrounds or 50 interchangeable conference tables, but to be able to get that, you're going to have to slap a Microsoft logo on there somewhere, like it's sponsored by Microsoft or something, right? So they have their developers design this this layout for you for your boardroom, and then you do it there, and you got to have Microsoft a little bit in the background or something like that. Like I just think it's crazy, but that's just me. Let me leave that alone. You see, I get excited. But just keep an eye on this. The next level we have is 198.10. Then below that is 191.04. If you're looking around at a lot of other tickers, right? Facebook is much stronger and way further up than those things, right? And it's not as high as it could be, but it definitely isn't as low as the Netflix, right? It definitely, and let's zoom out and take a look at this. The best way to look at this is to go here. Go to the 1 month. See what we see. Okay. See, I gotta check as I'm talking. Oh, that's big, big, right? That's definitely a oh wow, significant drop, right? So yeah, just like, so if we're looking at this, we see that there is buying around this level here, this 161.20s, there's buying. There's a little bit of buying around the 173s. So as we're looking to come back down, 198 is a level. 191 is a level, then 184 is a level. If we can get up above this 210, then we can talk about something. But that'd be something to watch on Facebook or Meta. But watch your levels. I'm not, things just like they're going to sell even more, and just be careful. You know, watch your 6. We'll see what happens around the 198s, the 191s, 184s, 182s. Want to see what happens here. But there are people that are screaming it's a bear market and it's all over, and all different types of craziness, right? We don't know the future. We don't know what's going to happen. Let's act like it. Size down, right? Trade your plan. When things change, do something different. So we have lines here. I know you're looking at the monthly chart. I just want to give you these higher levels. 181.91. Our next line is what's this here? Is this 157? Our next line is 157.86. Below that, we have 138.20. Below that, we have these 119.07s to the upside, right? We have this 200 area, 292. Above that, we have the 217.40s. Above that, we have the 221.50s. So we'll see how NVIDIA plays out. I believe they said there's a shortage on chips again, right? So we want to see how that plays out. So even though the market may still be constricted, and there is a supply-demand imbalance, there is just, I think, the cost of producing things and materials just based on inflation, and you know where they're mining their minerals that make their chips. Where are those countries? Is it Russia? Is some of that inventory in Russia? Is some of that inventory near places like Ukraine? Are all those countries? Is it China? How friendly are those countries, and how are they feeling about their business dealings with the U.S. right now? So it's all interesting to me. Let's drop this down to a 4-hour chart. But definitely not doom and gloom. Don't feel that the market's dead and it's over, and just go invest all your money in real estate. Though I do investing in real estate, not a bad idea. But people saying that it's a wrap and all those things, don't listen to those shenanigans, man. We're in a tough spot right now in the market, but what we want to see, me personally, if I'm looking here at NVIDIA, it's from 26th of April. Let's see if we sell through and we get bearish below this 181.90s. If we do, next level I'm watching is if we can sell down to what's this here, about 173. then potentially down to 160, 150s, then 157.80. So we'll see if that works out. If we buy back up, what we want to see is, can we get back up? Like, is this a channel setup, right? Where we'll be bouncing between the 180, 190s and the, what's this here? And the 292 area, like $200.92. So we'd be bouncing between this area. And why do I say that? Right here, we almost touched it back around the 25th of April. We dipped down here after that, around the 26th of April, and we bought back up around the 28th of April, back tested again. This is overnight session, 29th of April, back to the bottom, back to the top, right? You see? Now we're back to the bottom. Are we going back to the top? Interesting. So I'll be keeping an eye on NVIDIA to see if that pattern holds. If we crack through the bottom of 180, 190s, I told you the levels I'll be watching for below that already. Keep it moving. Let's go to the 1 month. Hello, my baby. Hello, my honey. Hello, my sunshine gal. That's still there. Oh, I'll remove that. Yes. Remove. Bada boom. Okay, doke. So we're looking at Apple. If we are going to drop, we want to watch out for, what is this level here? The 149.90s. That looks interesting. If we get through there, we have a bunch of lines. Let me line those up for you. Ha 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 ha. 149s, 147.50s, 144.91s. 143.45 is a different area, like the 220. 142.14. Then it starts to get funky down here around the 137s. If we do happen to buy back up, it would be great to get through the 169s, but we're not going to get there immediately. Let's flip back to the 4 hour. So recently we've been holding those 153.50s, 153, 154s. We've been holding those levels. It looks like when we've pulled back on Apple. If we break that, the next level we want to watch out for is the 149.90. See if we can get below that. The last dip there, the buyers did step in and buy us up. If we dip below that, you have those levels I mentioned earlier. I don't really have a thesis on Apple. Just going to be watching it. I use Apple to trade other things. But it's going to be interesting. If the buyers flow into Apple, we're going to move up. If the buyers don't flow into Apple, we're going to continue to move down. And be careful. Remember, Apple is one of those tickers, one of those stocks that's sitting in a lot of people's retirement funds, right? A lot of hedge funds, a lot of institutional investors definitely have Apple as part of their basket. So keep an eye on that. That is something to wonder about and worry about, right? In my opinion, I would definitely keep an eye on that. And last but not least, Tesla, definitely not least. So if we're looking at Tesla, we did drift below the 857s, but we weren't able to sell through the 819s. This is if we're sort of bounced there a few times. Very easy for Tesla to go between these lines. Please pop this on your chart. These lines that I drew in: 784, 819, 857, 937, 969, 994, 1019, 1040. All these are interesting levels to watch on Tesla, right? Let's flip this up, go down to the 1 month. Um, and also, I believe that they did mention that Elon is not. So this is going to come down to his sales. Honestly, Elon is not only using the sale of stock to be able to fund his purchase of Twitter. Right? He has other things going on there. So if that's a worry, if the reports are to be believed, it's not a worry. It's not what he's spending the money on. So looking at this, doesn't look great, to be honest. But when we get down here, if we get down here anytime soon, these 590s break at 600, those are the Sophie levels, right? And so that's where a lot of us want to load up and ride this bad fella back up. But let's see what we have here. It almost looks like a janky uptrend that you have on Tesla, but we have the levels to watch. 937 is to the upside. Above that level, 969, 994 to the downside. We have 857, 819, 784. Be careful on Tesla. Take a quick peek at the SPY. It's possible. We have to wait and see how we sell. 397. So it's possible. Let's drop this down to the 4-hour really quickly. Okay, that's interesting. We'll see. We'll see. It's like it's just kind of sideways. That's interesting. Okay. I will stop here. Take a peek at the QQQ. I'm not really gonna go through these right now. I'm really not gonna do it. I'm not gonna do it. I already did the futures, so just looking at these. Okay. If you like this video, please don't hesitate to subscribe to our YouTube channel, Power of Pivots, where you can look forward to receiving not just videos from me, but videos from Elisa as she walks through the process she takes when she trades her Power of Pivots setup and script, right? She does great pre-market entries, great intraday, and great post-market entries, right? Even if you're looking for swing trades, she's really good at those things. But so please, go ahead and subscribe and look forward to receiving those videos. Thank you so much for your time. Happy Mother's Day to all the mothers. Enjoy your week. Remain safe. Stay positive. We'll see you next week.